Hey, what's going on, everybody? It's Mercury here. So, it's my first YouTube video ever. And so, my first YouTube video ever, I want to talk about what I think is the most important part to becoming a trader. For technical analysis, period, in general, all across the board, I say if you don't understand market structure, then you might as well just throw everything out the window. Market structure is the base fundamental for every sort of technical analysis above it. I don't care if it's Ichimoku, Gann theory, Fibonacci's, trend lines, patterns, whatever it may be. Market structure is the ground foundation for everything, any sort of TA above it. Okay, so what is market structure? Well, when you talk about market structure, it mostly just applies to what is the trend. So you always hear traders talk about trade the trend, the trend is your friend, whatever it may be. How do you know what the trend is? You know what the trend is by just simply analyzing your market structure. So this is the Apple chart. We'll analyze our market structure. So what's our market structure for Apple at the moment? Well, right now, it's clearly in an uptrend. We're consistently making higher highs and higher lows, right? So this is moving in an uptrend, and you should continue to anticipate the uptrend until it breaks, right? So continue to anticipate these higher highs and higher lows, and you can use that anticipation to look for an area to buy the dip. And once you get that lower low, you have a break in your market structure. And if you follow that up with a lower high, you're all of a sudden trading bearishly on Apple. You would have a confirmed downtrend. With lower lows and lower highs, you would then have a downtrend. Until that happens, you should continue to anticipate the uptrend. All right, so it's not complicated by any means. It's a very simple analysis. With higher highs and higher lows, you have an uptrend. With lower lows and lower highs, you have a downtrend. How do you know when something's consolidating? Back here in around August or September, you have consolidation on Apple. So, what do I mean by that? Well, if you're analyzing your market structure, you see a high, a low, a lower high, a higher low, a lower high, and a higher low. So, you have a confirmed consolidation pattern, right? So, this is why I always say trend lines will kind of give you false hope. Right, so here there's nowhere that you can actually draw any sort of trend line or symmetrical triangle or whatever it may be, because it doesn't help you, right? Had you drawn your triangle from here to that point, it never got tapped. It's not the idea that you should be able to draw symmetrical triangles or consolidation patterns necessarily. It's more so the idea that symmetrical triangles are just a way to portray a consolidation, right? So, and that goes for every pattern, and it's simply just a way to portray your market structure using some sort of trend line or box or whatever it may be that you put on your chart. But really, the idea stays the same in that until you break below this low, you're still consolidating. So, how can we use this? Well, we can use this on Apple for every single time frame. I'm going to delete these here. So every single time frame. You can make an analysis on this no matter what. So on the hourly time frame, we already know our 4-hour and our daily are bullish, right? They're bullish market structures, they're trending in an uptrend. So what is our hourly telling us? Our hourly says you're also in an uptrend, right? So this is a low and this is a higher low at the moment. And we're also testing our hourly 200 EMA/MA. So what can we look for here? Well, I personally would look for that higher high and continuation of our trend because that is the trend thus far. So I want to anticipate the trend to continue until it breaks, which inevitably it will break. But I want to anticipate it to continue to ride the wave and trade the trend, as you always hear people say, until it happens, right? And the idea is you'll be able to profit enough times from the trend to more than make up for that one time that the trend does inevitably break. So, right here, you could use an entry on Apple. You could put your stop loss below this low, even. That's your invalidation. If we break below this low, you now have a break in your market structure. Then, if you follow up that break with a lower high, you're trading bearishly on your hourly chart for Apple. And then we can zoom back out. So now that we have an entry, now that we have a confirmed stop loss and good invalidation, we can start looking for targets. So my target personally would be this 1.618, where Apple goes into price discovery. I expect this trend to potentially continue all the way up. And if it breaks, I would think that we would get a much deeper pullback. So now I have my own setup for Apple that I'm going to use. And keep in mind, I'm not a financial advisor. Nothing in this video is financial advice. This is simply just for educational purposes, and these are my thoughts and my opinion.